Hi everybody and welcome back to the channel. So here's my portfolio update for my investment portfolio on WealthSimple Trade, where I'm trying to grow a passive stream of income primarily through dividends. In the portfolio, Apple has been sued by the Department of Justice. I don't think this is quite really going to end up too badly for Apple because a lot of the claims that the DOJ is making in the lawsuit is one that Apple harms the consumer, two, Apple is harming developers with their app store. So for the first point that Apple is harming the consumer, I don't see how that's the case. You know, one of the lines that I've read from there was that Apple charges, $1,600 for a smartphone. And, apparently people, that's just far too much money. And, you look at other competitors, there are a lot of other phones on the market that are Android based that you could pick that are the same price as the iPhone or even more expensive than the iPhone. And, customers don't have a gun to their head saying you have to buy an iPhone. I think that people just naturally choose the iPhone for many, many reasons. If you really want proof that, Apple doesn't harm the consumer, you can see how devoted of a fan base and following that they do have. It's very cult-like in a way. If you go into, go into an Apple video on YouTube and write some negative comments on Apple, for an Apple channel, or go to an Apple forum, say something negative about Apple to someone who loves the brand, and you're going to see the reaction. You're going to see the claws come out for people just defending this company it's like you insulted their family member or something. The second point of the lawsuit, which is absolutely ridiculous, is complaining that Apple charges, they basically charge a 30% fee to developers for any sales made on the App Store. Now, that is quite common in the industry. I mean, if you look at even the Google Play Store, it's a similar story. If you're a PC gamer, you know that Steam does the same thing. They take a large fee, but, it's not like the developer doesn't get any benefit in this exchange, right? They get to be on your marketplace. So I think of it this way, it's better to earn 70% of something than 0% of nothing. And that would be the alternative if an app developer didn't pay Apple, that 30%. They are getting access to over 2 billion devices. That is a lot of customers. So there's a massive benefit there. Secondly, as a customer, you are far more likely to trust the Apple Store than, some third-party website where you download an app that you're not really aware of. That is a huge barrier of entry to people. You can kind of think about it as if you were, let's say you were a merchant online. You're an online seller, and then, you try to sell something on your own website instead of using Amazon.com. Now, Amazon.com also allows third-party sellers onto their platform, and they're also known for their fees. But again, what do you gain by being on Amazon? You have probably the number one online retailer. You have access to all of their customers. You get a direct feed to them because if someone is on Amazon, they're more likely to be confident in making a purchase from a store that they're, not really aware of. Like, they're more likely to buy your product on Amazon than they are on your own personal website, which has, no credibility and there's no trust established there. If a customer buys on Amazon, they feel confident in that purchase. So I feel it's the same way for the purchases made on the Apple App Store or any other store. So to say that Apple shouldn't charge fees for their app store is ridiculous. And the last major point of the lawsuit that I want to touch on is the fact that FaceTime or iMessage is very restrictive and it keeps people locked in the Apple ecosystem. But, honestly, there are a lot of advantages to Apple's built-in apps. So you don't need to download a third-party app to start group messages that are fully encrypted. You don't need to download WhatsApp, Skype, or Zoom on an Android. You can simply call or message other users, and any other iPhone user will be able to answer it. This convenience is what I believe leads people to stay loyal to Apple and continue to only buy Apple devices.
So we talked about connectivity being very vital to what Steve saw. And I think a big aspect of connectivity is communication. And communication was revolutionized with the iMessage, right? How do you think Steve would feel currently about the state of communication, specifically between people who aren't within the community of Apple and are part of the iMessage, but more so on the green side of things with Android? We've seen a massive divide there. So how do you think Steve would feel about adapting RCS, rich communication systems, that would normalize and streamline that?
Yeah. Tim, can you bring peace to the phone wars?
He always told me not to wonder what he would have thought, just to do the right thing. I don't hear our users asking that we put a lot of energy in on that at this point. And so now I would love to continue. I would love to convert you to iPhone.
Okay.
It's tough. Not to make it personal, but I can't send my mom certain videos, or she can't send me certain videos, and so we leave.
Buy your mom an iPhone.
All right.
This is a great playful answer, but the simple fact is it's easier to just be on an iPhone if all your friends or family are also on there. You don't need to download extra apps. Everything just works together without any messing around, no configuration. That's why I believe people buy them. They're very easy phones to use, and you can easily connect to people who also have them. I believe that Apple at most would pay a fine and maybe make some concessions to open up some parts of their ecosystem. And speaking of Amazon, I did purchase about 7% of a share, just increasing my stake in Amazon. So that's one thing I really like about WealthSimple Trade, is the fact that you can buy shares fractionally over time. Very glad I decided to sell Intel, Aritzia, and Tesla, from a previous update and go into here, because all those three holdings have been struggling, and I think Amazon is a far more predictable business with a very strong competitive advantage that's just going to continue getting stronger over time. And with automation and AI, I think Amazon is going to strongly benefit from that and just become a more profitable cash flow machine. And that's why I decided to initiate, such a large position and sell out other holdings, because I think that this company is just heading in the right direction. And they're getting there in a timeline that is very attractive. They're doing it now. I'm not waiting years and years like I would with another company like Intel, which is just struggling and going to have more and more trouble, and they keep delaying the timeline of their profitability and when their projects are going to be completed. I'm sorry, I don't have time for that. Amazon has completed their capital expenditures to basically double their fulfillment network. So this is a great business, and even since the prices have ran up, I still think this is trading at a decent valuation. I wouldn't fault anyone for wanting to build a position in Amazon. Of course, do your own research. I'm no expert by any means, so do your own research. And even if someone is an expert, they may not have your best interest at heart. So you have to take into account your needs, your goals, and your risk tolerance. Everybody's going to be different. For ATD, they had a recent earnings decline. So the recent earnings weren't too stellar. The primary culprit being, fuel margins, not being quite as good. So they did experience a rare dip in ATD. So as you can see from the star chart here, it doesn't go down very often. So I took advantage. I bought 3 more shares of ATD. When I initially invested in this company, they had 14,000 convenience stores all around the world. Now they have 16,000. So the story is playing out. They are continuing to make acquisitions. When they see the opportunity of a good deal come up, they will take it. And those deals are accretive to the business. So, they're not just going to make large acquisitions just for the sake of increasing revenue, but not driving that, bottom line profit, which is at the end of the day, what gives you your returns in the stock market. So I love that the company only does good deals. and it's very well managed, and the fundamentals are growing. They are getting more and more a larger piece of the convenience store market throughout the world, and they still have so much more market share to gain in Canada, the United States, Europe, and elsewhere. So very, very happy to add 3 more shares of this wonderful business to my portfolio. And then with Costco, they recently announced a nearly 14% dividend raise. So very happy with that. Costco has been, a wonderful business, and it's performed really, really well. I do wish I had more, of course, but it's very hard to get over that valuation. I'll keep saying this, that if Costco fell, I would really consider increasing my position by quite a bit. And then Dollarama had a recent earnings report. So their earnings increased by about 20%, and they announced a 30% dividend raise, which is incredible. That is a huge, huge raise. Overall, the story is playing out really well. In a previous video, I did say that I thought the fair value was about 110. It's sitting at 113, so the market seems to agree with me. And if they keep heading in this direction, I just don't see any blemishes in this company. And, in a lot of different environments, they just continue to keep growing their earnings. So, there could be a recession, there could be a housing crisis, whatever. The dollar store remains strong. Maybe they don't grow as fast, but they still grow overall. They generally just see steady growth, and their same store sales are increasing as well. So that shows that, they don't necessarily need to open more stores. Of course they are, but their existing stores keep getting more and more efficient and getting more profitable over time. And that's primarily just due to my observation of, the price of everything in Canada has gone up substantially. And the fact is that, people have to shop down in more affordable stores. And that's not by choice, that's by necessity, just because of how high the food prices have gone. So I do see, I guess unfortunately for for us, the cost of everything is up, but that will favor Dollarama as a business going forward. And it's kind of, a nice safe hedge against a falling economy, where our purchasing power is quickly declining because of the devaluation of our currency. And then with ENS, I just kept purchasing more shares with dividends that I've received. So we're up to 144 shares of ENS, and just pays me nice monthly cash flow. Not too concerned with the current value. I really just like getting more and more of this company. With Granite REIT, I purchased about a quarter of a share just using my dividends that I receive from Smart Centers and Granite. Just trying to build up that real estate while it's being hampered by really high interest rates. We got some not so great news in the US, so, REITs have declined. So, just going to take advantage, acquire my real estate while it's not a loved sector in the stock market. And, it will have a recovery, but until then, I'm just going to get that nice monthly rental income in the form of dividends and just keep buying more and more of it. And then with Palantir, I bought 4 more shares since it dipped. So I have about roughly half the position that I want in this holding. And, I hope that the shares continue to fall. I just want to have a chance to acquire more and lower my cost basis. So, when I'm not, done purchasing a certain position, I actually root for the stock to go down, not up. And then with Starbucks, I actually bought 1 more share of Starbucks since it has hit, basically a 52-week low. I thought, this is a great time to get more. I think the business itself is going to be fine. I think the market is kicking them down a little bit too hard. So I personally think it's a good time, and that's why I decided to buy another share of Starbucks. And I think their earnings will be decent. They are growing in emerging markets such as India and China. So that could be a great growth driver for the company overall. And I do think that they'll strongly benefit from automation, more so than other restaurants, because they primarily deal with beverages and not food. So beverages are a lot easier for a machine to handle and mix. than food. I think that's a bit more complex than people are anticipating. So I think Starbucks will strongly benefit from that, even if they have competition from companies such as Dutch Bros and, of course, McDonald's with their Cosmics concept that they have for their kind of Starbucks knockoff. And then with TELUS, I purchased 2 more shares since, the telecom sector has been hit really hard by really high interest rates. I do think this is temporary, so reinvested the dividend that I received from them, which covers, nearly 2 shares, and then I just covered the rest. So 102 shares of this. And with TD Bank, I bought myself about a half a share of TD Bank since it dipped below the $80 range. This is another stock that will recover in the future. It's just going to take some time. And then for Vici Properties, I bought about 4.2 shares, reinvested the dividend to Vici. This has also gone down immensely, so I decided to buy 4 more shares. It's a great time because the business itself is doing fine. The market is just not very optimistic about a lot of rate cuts this year. I think the expectation now is like 1 rate cut this year, but we'll see what happens. No one can really predict where the interest rates are going to go. Even if you're the head of the Federal Reserve, you're not going to know. So being a random person, you're not going to have any insights there unless you have a crystal ball or you could see the future somehow. And if you enjoyed the video, please do leave a like and subscribe to the channel, and do feel free to use my WealthSimple link in the description below, so you can get some free money, and you help me too. I get something too if you do want to get started investing yourself. So for the dividends earned all time, I'm at 2542.03 since starting the portfolio. Annual dividends have grown from $14.93 per year to $15.21. The monthly average has gone from $124.42 to $126.81. So, over $2 a month extra in passive income. And then if we look at the daily average, I've gone from $4.09 to $4.17. So we're getting closer to that $5 a day dividend goal that I've set out since I've crossed the $4 mark. We're just going to keep moving the goalposts and stay motivated and keep reinvesting my dividends and making new deposits. And then for my days of freedom, we went from 24.4 days to 24.89. So nearly 25 days of expenses are covered per year from my dividend portfolio, which is nice to see. My next goal is to hit $2,000 a year in dividends. We have recently crossed 1,500, which was my previous goal. So again, just raising my goals as we go over time. And for the dividends year over year, 261 in my first year of investing, and then we're basically at the midpoint of April, even less than that. And so less than, let's say, 3.5 months, we have earned $429.75. So it just goes to show the progression over time. And we should hit like 1,500 this year in dividends, maybe a little bit more. We'll see what I can do. And then we can see in April that we already have $80. So it should beat the former record from January of 187 because I keep buying these monthly payers, and I buy, of course, stocks that pay in this set of months, the January and April month. So with that said, have a great day, everybody, and drop down in the comments below like what you're buying in the market, and have a good one.